the Nasdaq 100 and the S&P 500. We talk about exactly what is happening here on these charts. Specifically, what's happening today with some of the earnings that have just started. Netflix, we have some breaking news there. The debt ceiling, everything in between. We had some more jobs data as well. We have a lot of answers here on the market. We started seeing a little bit of a bounce near midday, but we still need to talk about what's happening in the overall direction. Before we get into that, I have to ask you to consider doing two things: like and subscribe. Every single day I post videos for you so you are prepared on the market, unbiased, right or wrong. I tell you what is happening and I give you an overall viewpoint of I'm winning, losing, everything in between, give you an update every single day. Let's get to it. Now, the Twitter link is down below so you can see the updates. I recommend checking that out. But let's get right into this. So first thing we're going to do, cover the charts, and then we're going to go over some of the fundamentals and things happening along the way. Shout out to ziptrader, just so you know. I recommend going and checking out his recent video. And I have to post this video a little bit later because I recorded the video and the sound was all jacked up. So as we look at what's happening, let's talk a little bit about what's happening with ziptrader. He went pretty big into Nouriel Roubani, Dr. Doom. You can look into what he's saying. And he's actually one of the few people that gives him credit. Roubani's been almost correct about everything. He's been correct about a lot of the movements on the market. And the thing he's most known for is being the biggest bear on Bitcoin. Anyways, that being said, he is very bearish on the overall financial system here in America. We're going to dive into some of these theories and what's happening specifically on the market, and kind of what played out today was what the Fed was saying. The Fed said things that kind of made you look bullish, but we need to talk about exactly why I believe they're lying to us. So let's break it down. So first thing here, looking at the charts. What is happening here? Obviously, we're looking at the 2-hour time frame. Ascending wedge, you broke out, you hit supply, boom, shot down. Now, giving you the best visual, what I want to do is come over to ES and just give you a look. Actually, we'll go to Nasdaq since that's what we're looking at right now. Go to full screen so we can see, and just giving you a visual on what's happened. Again, I like to use this visual. It's very simple to understand. This is basically on the 4-hour chart, this whole move up that we had, giving you what's happened. So we had a previous high here. We broke above, mounted it. New local high, mounted it. New local high, we mount it. New local high, we mount it, and so on. Just keep pushing up and up and up and up and up. Very strong movement. That's what you want to see. You want to reestablish local highs, make those supports, continue to flip the SR levels. That's bullish, right? Now, what I said we wanted to see into today to confirm some downside thesis. I think we're on the right track, but I do not believe we're done. Why? So when we dive into this, let's explain. So I said yesterday, we want to start breaking some of these levels. So we broke level number 1, give or take. You broke down, retested, came back. We broke down, retested, came back. Now we broke down to around 11.3. We bounce, and we're kind of in this little no man's land. Now, I will say also 11.4 is a pretty nice level. We're going to break that down a little bit more. But you can see we're slowly just edging down. What I will say from this, I still am very bearish. I still have all my Q positions. Have not exited any of mine, although those have started to get, I think they got into around 25% profitable. But I still held on to them. Didn't do anything at like the peak of today, right? So, again, I want to be very clear. Because people keep, every time I go live, and we go live here a lot on the channel, 10:30 a.m. Central, usually. What I want to say also about that, the lives are free. You do not have to donate. You do not have to pay to watch them. But I cannot keep those live on the channel, or YouTube will push me out as a live streamer. I don't want to be a live streamer here, right? I just do that to help you guys. It's free content. I try to make as much free stuff as possible, right? So the only way I can share that is if you're a member on the channel. So you can go back and watch old lives if they're not published on my channel if you're a member. But again, if you just show up to the live, it's free. So giving you both options. Now, going into this, what's happening here? In my opinion, I believe trying to flag a little bit on the 2-hour. It's not as visible here on the NQ. If you go to something like ES, I think it's a little bit more visible. You can see breaking through levels, bear flagging at that bottom of the level. Just throwing it out there. End of the day, what happened? We had Netflix earnings. Now, this is going to be a pretty focal part of the video. Now, I'm going to tell you right now, targets on ES, targets on Nasdaq. Before we go any further, if we look at major bullet points we've been watching, specifically the daily time frame, showing you the 200 and 100 SMA here on ES. You are back below. We held it for 1 or 2 days, similar back into November, December, and you just dropped drastically back below. Happening right now. You're still above the 100 SMA. That's a very big focal point. You need to be watching that. Again, we ping-ponged there for 30 days, almost back to November 10th through roughly December 15th, December 10th. I'm just saying, happened before, could happen again. Right now, you're also on a pretty big level, around 3,900. You can see this was a very big inflection point coming all the way back, massive SR level. We held below it, couldn't get back above, then we shot above it and mounted it. Very big. You need to be watching these points. We're at very significant levels. However, I'm going to tell you, again, it's coming to the point where we're not believing the ridiculous, stupid news being told to us by the Fed. We've gone over PPI, CPI, all of that. We're going to have to break that down here in a second. But I'm going to tell you right now, do not drink the Kool-Aid. So targets here on ES, I'm going to tell you right now, going to around the 2-hour time frame. Short term, I want to see us get below 38.90. Okay, this is my shortcut. I need to get us below it. We get below 38.90, I'm a confident bear. I think it's just coasting from here, and we're just cruising to the downside. Nasdaq, it's a little bit simpler in my opinion. I think we just need to get below locally around 11.3. If we can get below this range and hold below, I think it's smooth sailing to 52-week lows. I'm just going to tell you right now. I think earnings season is setting up to be terrible. Personal opinion, will break this down a little bit more. So that's what I want to see to confirm the bear thesis. If we continue up, I think you'd have to get back below, above around 11.55, 11.500 on Nasdaq to confirm, maybe pushing back into bull territory. But to really be bullish, you got to break above 11.800. Now, back to ES and back to some of this news. On the day, what happened? Netflix earnings. Now, specifically from Twitter, I want to cover something, but let's talk about it. So this is Earning Whispers. It's the easiest way to track any earnings. What did you have coming out today? You had a consensus estimate of 47 cents on the EPS. You came out at 12 cents. 82% miss on there. You had a 0.4% beat on revenue. Very slight estimation was 7.82. Came out 7.85. What's the significance here? Why do I hate it? Now, we're going to go over to Twitter. And again, my Twitter link is down below so you can check this out. I'm trying to post what I think is relevant throughout the day. And I've been doing a lot more posts as you've seen recently. Now, if we dive into this, this was the biggest news on the day. And this is what CNBC and everyone wants to highlight to you. Netflix added nearly 7.7 million subscribers in Q4, more than the 4.5 million estimated or forecasted. What is my opinion? I think this is where you have to focus everything. Why are they growing so fast, and why is their revenue missing? Actually, why is it less almost than it was last quarter? It makes no sense, people. Now, you could say that if you're looking here, that it's just cost of acquisition, it's this, it's that. I'm just telling you, I think these numbers are absolute bull. I think this is illogical, and it's just going to set the tone for what's to come. I'll tell you right now. I will say, though, from their earnings statement so far, they have said that they're on a clear path of revenue growth now, because I guess they couldn't grow revenue until now. Just saying, amidst a recession, unemployment's at all-time lows, but they can't grow revenue right now. But they're going to start. Don't worry, as unemployment starts to rise, supposedly. I'm just saying, right? It doesn't make any sense to me. So, as we dive a little bit deeper, the debt ceiling. This is probably one of the biggest things on the day. Now, again, I underplayed the debt ceiling to a massive level. I assumed we would handle this. I assumed we'd be adults, and they would say, look, you got to handle this. Now, there's two sides to this. One, Democrats just hate Republicans, and Republicans just hate Democrats. It's the way it is. It's the way it probably always will be, sadly. From this point of view, Republicans' view to Biden, which we mentioned yesterday from Biden's standpoint, he said he will not negotiate with the Republicans, to which I would probably say we probably should have just negotiated, because now this is not the way. If we look at what's happening now, basically the Republicans came back and said, look, if we give you this debt ceiling raise, what is stopping you from just doing it again and requesting it in 6 months? And it's a valid statement, okay? Republicans at least want a little bit of answers. Biden, he says, I don't got an answer to you. I got voted president. The end. Well, now this is where we're at. Now, what they said, though, is this. Yellen says the Treasury is taking extraordinary measures to avoid a default as the U.S. hits the debt limit. They said they can take these measures until roughly June before they have to default. Now, this article will be down below, and it goes into deep understanding of what extraordinary measures may kind of include. Now, I'm going to give you the most important parts here. Now, there's some bad parts in this. Short term, it's not bad. If this proceeds for a few weeks, it's going to look ugly. Extraordinary measures are basically accounting maneuvers For example, the Treasury Department would pause investments in some government funds, then make them up once again the debt limit has been raised or suspended. So basically they're saying, look, 401ks, gotta do what we gotta do, people. We gotta take care of the United States first. We got you back though. By suspending investments in certain funds, the Treasury temporarily reduces the amount of debt these funds hold, which can allow the government to stay under the borrowing cap and continue standard operations for a longer period of time, said Rachel Snyderman. So this is just food for thought of what's happening. Now, we can go deep into this. It's not the greatest thing ever. I'm not going to lie to you. It's pretty gross. So we need to start understanding that this could be gnarly. Now, again, Snyderman also said these measures were a temporary fix that Americans should not immediately notice. Again, like I said, first few weeks. For example, she said, the Treasury would not be dipping into hard-earned savings of federal employees by carrying out the measures, and the Treasury would eventually restore those funds and any interest that would otherwise have been earned. We promise. So that's where they're at right now with that. So let's talk about what's going to happen. If this plays out, it's going to be terrible. I'm going to tell you right now. If that part of it, which I don't think it will. I've never bet my money on the debt ceiling, and all that. I think it's going to resolve itself. But if it doesn't, God forbid, that's some treacherous territory we're embracing. Now, debt ceiling aside, we can close our ears, no worries there. That tends to be what investors do that are bullish these days. Let's take a little bit deeper of a dive. Now, I'm doing all this from Twitter because I did a lot of ranting on Twitter also today. Fred Brainerd talked today, and there was a few key bullet points. Now let's talk about number one. China's rapid abandonment of zero COVID policy is a significant event that could significantly impact on commodity demand. Now, I've been saying China is a giant question mark. If you remember, over a month and a half ago, we started trading some China stocks. Alibaba being the big one, right? We talked about it down here near 75. It ran up to 85 mountain, kept going. People keep asking me, Tyler, what do you think about China stocks? Do you think they're going to keep going? Look, I'm going to tell you right now. As an investor, number one thing you hear, day one, buy the dip, sell the rip. Buy the top, sell the lows, right? Or that's what they tell the dummies in the market, right? That's what apes usually do, the ones that are buying memes all the time. Right now, you are buying an almost 100% pump off of Baba. I get it, they've got price target raises, but you're also messing with one of the most volatile and dangerous markets out there right now, which is China. What did we tell you from this? In December, they reported the highest death toll so far from COVID, 70,000. That's the biggest number so far. Today, they came out and said that their COVID issue is non-existent. There's no problems. I'm just telling you, it's a communist country. You never know what the hell they're going to say. We don't know. They just stopped giving COVID updates, and they just gave one from 3 weeks ago. So it's just a huge issue. I don't want to focus on this. I'm not a fan of China. I think it's very dangerous. However, if we look at the facts here, this will and could be bad for commodities. Again, before we dive into some of this other stuff, which parts of PPI and CPI are going down only? Primarily, it's energy, okay? So if we look at energy and then also some commodities, steel, lumber, nickel, these other ones, they've been dropping, okay? What's happening from there? If these start to go back up, we already told you what's going to happen from CPI and PPI. I'm going to go over the barrel in a second also. Going a little bit further, Fred Brainerd, more stupidity. I mean, it's really, this is just crazy what we're talking about. I don't know how these people are allowed to talk in front of America. Wages do not appear to be driving inflation, and there is no wage price spiral akin to the 1970s. Now, I will say, we do not have a wage price spiral concern yet, okay? Why? Because inflation is still not technically rising as it was before. However, scratch that. If we look at inflation numbers, what is staying the same? Even though energy prices are dropping, what is staying the same? It's clear as day what's staying the same. It is everything except commodities and energy. Everything is staying the same. Cost of living, cost of food, cost of shelter, everything. Insurance prices, medical bills, they're all going up, if not staying flat. Okay? Cost of shelter should be dropping in the winter months. Historically, it does every year. I'm just saying, even during 2020, 2021, it was doing it. And the strongest real estate market we've had in years, it was still dropping in those months. I'm just saying it's a seasonal thing, but it's not doing it now. This is a major cause for concern. So they want to say it does not appear to be driving inflation. I would argue it's the only thing holding these numbers up, because our employment rates, even as we proved today, what did we get? This is our jobless claims today. It's our lowest jobless claim in 6 to 7 months, going all the way back to last April. This is our lowest jobless claim, people. Unemployment continues to go down. How can inflation really be nullified, attacked, or handled if wage growth is still occurring? Wage growth is happening. It's slowing. Wage growth is slowing, but it is still on an upward trajectory. The Fed also said, remember, we went over this here on the channel. It's important. That's why when people ask questions, I'm like, look, you just got to watch every day. I don't know what to say. Put me in the background, take a shower, play this. I don't know. Just listen. I don't know what to say. But if you look at what's happening, the Fed even said, right now, unemployment, despite it not being at the peak, this is the hardest for middle to lower class America. Okay? It's important to realize what's happening here. This is where everyday consumers are struggling. That is why jobs remain very, very high. Everyone has a job right now. But the important thing to realize is demand is still dropping. How can demand drop if all this is happening? Okay, we need to understand this. What could cause inflation to drop? What else could cause this? If demand is dropping across the board and everyone still has their jobs, it doesn't make logical sense. You have to understand this. What do you think was going to happen when people start to actually lose their jobs? And again, the Fed just continues down this rabbit trail of lying and lying and lying. Okay? Deeper, next thing. The Fed Brainerd, the recent slowing of rate hikes allows the U.S. Federal Reserve to assess more data as it moves policy to sufficiently restrictive level. I will say this. This is true. 1,000%. And this is why the Fed is slowing down rate hikes, because they need to get a better understanding of what is happening and what is going wrong. Now, from the Fed's readings, this is why when we look at CPI and PPI, we're getting very clear-cut answers. When we look at those, and we do the deep dives here on the channel every time we get them. When we look at those, we can see very clearly what's happening. Energy, massive. If we eliminate energy from PPI and CPI the last 2 months, you're actually getting a raise in inflation. Okay? It is still going up. However, we're not going over that information with you, the people. They're not. If we go, we've broken it down, we've covered it all. They refuse to be honest with the situation of what's happening. Now, is data actually dropping as a whole? Yes. You eliminate energy from that, it's rising. Food for thought. So when we're looking at this, I think it's important that what they're doing, they're going to slow down rates. I still think a 0.25 is probably coming at the next meeting, even though they're pricing at 50. But I'm going to tell you, I still think that this is dangerous. I still think that if we look at what's happening with energy, across the board, very bad news. Now, giving you a visual of what's happening with energy really quick. Don't have much time. Want to get out of here pretty quick after this. Oil. Despite the past few days, again, we're just going to pull up SPY here so you can see. Okay, if we want a visual of what's happened, basically, if you're brand new to the channel, I haven't been saying, when oil started to rise back last year in January, when it started really spiking back up, what happened? The market got wrecked. Why? Because oil really sparked inflation, right? Cost of everything shot to the moon because everything costed extremely more. Then we also had the food crisis with grain and things like that. Going further, when oil peaked right here in June, what happened? The market got a good bounce back. Everyone remembers June through August, what a time to be alive. Everything went green. Now, something interesting happens here. In August, even though oil is really low, you get a little bit of a bounce there, and the market starts getting hit. But even when oil keeps dropping, the market keeps dropping. And you can really see there's a disconnection here. Even while oil is dropping, so is the market, which was kind of contrary before that. And inflation just kind of sits there. And then, basically October into December, we see inflation numbers look a little bit better and we get a little bit of love. But still, not a lot of upside here, even though oil is dropping. I'm telling you, my question, and the question you should be asking yourself, is what happens? Because right now, while the S&P is going up, oil is not going down. Oil is bouncing too. It's holding up better than most equities throughout these drops also. So the question you need to be asking yourself is what is going to happen? Even if you're not a bear, just ask as a bull, ask yourself, what is going to happen if oil can continue to rise? We've seen the inflation reports. We know what happened last year when oil rose. It's very simple. The writing's on the wall. Now the Fed, who doesn't like to mention energy and commodities, what are they saying? Now they're like, it's China's fault. It's China's fault. That's the reason why commodities are going to go up. No. SPR levels are all-time lows, and there's nothing else we're going to be able to do about it. And guess what they just said recently? We are not going to fill those SPR levels quickly. We're going to go very slow about it. So there's no bailout. There's no help coming with energy prices. The next time they start to rise, they're probably going to stay there for some time. We need to understand that. Did Biden get Exxon to start cutting their profits? No. What's happening with these stocks, actually? These are the stocks, again, I love to highlight this. They're the ones at their all-time highs. CVX, look how close they all are. Look at all this. Oxy's probably the best bang for your buck right now. It's the one Buffett has. And again, still looks beautiful, right? What about some of the tech plays? Where's Tesla? Oh, that's not that good. What about Apple? Let's find some. Oh, nope, not nowhere near highs, actually. What about Microsoft? Nope. Amazon? Nope. Nope. What's going on here, people? These are the questions. The only stocks that are really holding up good are your Caterpillars. Lockheed Martin, these are ones that thrived in the Dow. And again, what did we cover yesterday on the Dow? What did the Dow tell us yesterday, people? Let's go over here and look. As we look at the Dow, there's clear-cut answers, people, and you're doing it again. If we go to the 15-minute, we talked about it yesterday. Boom, bear flag, end of the day. Boom, today, hammered. What happened? It's happening right now. The same pattern. Now, I'm not going to say you're going to bear flag and drop tomorrow, but it sure as hell looks just like it. The area in the market that was holding us up this entire year and that did not let SPY make new lows was the Dow. Industrials, oil, gas, energy, Caterpillar, which was thriving on those low commodity prices, right? Guess what? It's hurting. This is the most pain in the market right now. It's your Dow. And if we look at what's happening, I'm telling you right now, if Dow can't hold up, they can't get great earnings again, you're looking at pain. The road here doesn't look great. I believe right now we've saw maybe some short squeezing on tech. That's what pushed us up. That explains the really terrible volume. I'm telling you right now, even if you're not necessarily bearish, I ask you to ask the question, what would drive us up? What could make us get to a breakout level for the bulls? Because as of right now, if you look at the Nasdaq, which has carried this market to the upside on this run, it's been the strongest sector, tech, okay? You've eliminated in just it's January 6th, so from January 6th till yesterday, essentially, that's around 12 days, okay? In under 24 hours, you have eliminated roughly 40% of that move. That took you 12 days to do. Let it sink in, let it process, and it was the only day that you're starting to get equivalent to the breakout volume. These are areas we have to think about and you have to be looking at. It's more than just technicals here sometimes. And again, that's why I say when you're using fundamentals, you need to go with the viewpoint of it could take me some time. That's why this trade, it didn't work out in 1 day, it didn't work out in 2 days. It took some time. We got the rejection we always were looking for, 11.75, and boom, it came down. So as of now, I'm watching this level, watching what we do here. I don't believe Netflix is going to bring this market up personally. I don't think it was enough. Maybe it leads to some upside tomorrow, but I'm telling you, my thesis still remains the same as so far as the bear case. And you need to be watching what's happening here. I'm telling you, Netflix, they can give you all they want. They can say, oh, we have a great path to revenue. But why are they not giving you details into what that path is? All these other companies do it. They tell you exactly what's happening. They go, oh, sales are going great. We acquired this, we acquired that. Netflix is spending too much money. They're acquiring more films. And guess what? Those films have got to produce. Look at their latest producers. They're not talking about that in their earnings call. Look at Glass Onion, flop. They may have done well. They may have been good movies. But look at the overall coverage, right? We haven't had a big watching on Netflix overall since Squid Game. If you really look at the numbers, it hasn't been that good. I'm just saying, go look at the stats. Don't believe me. Go look at their stats, right? They need to be providing you actual evidence of an outlook to remain strong. And they're not doing that right now. Yeah, people are like, well, Tyler, they're up, $30, $20 in the after hours. Their price to move was 10%. So if you moved up $30, that's what you would have to $31 to be in the money on any type of contract to make any money. You have to be up at 45, 345. So possibly you get it tomorrow, but I'm just saying be vigilant. Right now, you still have, you'd be right at highs. And how beautiful would this be if you open up and just get rejected? I'm just saying, look at what's happening. The strongest areas of the market that carried us here are now looking the weakest. Okay. Do you believe tech is back? Possibly. But I'm just saying, worry about the demand. If the demand is getting hit this bad, I'm telling you right now, it should be affected right into these earnings that are coming. Apple, Amazon, Microsoft, Nvidia. You should start seeing pain from these based on if inflation and all these things are actually, coming down, which they're not, people. They're not. Consumers are buying less, but they're still buying the essentials, and it's still the hardest area of the market. I'll have some more content coming out for you tomorrow. Again, have a good one.